Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a further look at the fallout from the March employment data, wrapping up February's employment in the U.S. and headline highest unemployment rate that we've seen in 2 years in the U.S. We'll take a look at that in just a second. But we're also going to rope in interest rate markets, U.S. dollar markets, and gold as well. As gold, everything's coming up gold these days. More on that in just a second. But let's start with the unemployment rate itself. It's always funny, these major data releases, like employment in the U.S., usually coming that first Friday of the month, and everybody looking at that non-farm data point, which is the change in jobs, can be negative, but usually positive. And it came in a really strong number again, third month in a row that it was strong. And out of nowhere, the unemployment rate and the revision of past non-farm numbers, the last one was revised down, and the unemployment rate here was 3.9% versus an expected 3.7%, really stole the show. The non-farm payroll numbers was kind of discarded because you would have expected that would have been a precursor to some U.S. dollar strength and maybe some gold weakness and some U.S. interest rate strength, and stocks maybe back and forth, who knows these days. But the unemployment rate being the highest in the last 2 years and being 0.2% higher than expected really shook things up. And where is this going to primarily shake things up? Well, everybody's eyes are on Fed Chair Powell and when he might cut interest rates. At his recent testimony, he said again that we're likely to cut rates in 2024, but we're watching inflation. And I don't know if he explicitly said that they're watching employment, but the high unemployment number coinciding with some of the highest probabilities of a cut at the June meeting that we've seen in recent weeks, now up to about 77% chance of a cut to interest rates by the Fed by the end of their June meeting. And this was just a week or two ago, more in the 65% range, and now it's nearing 80% as the data continues to come in a little bit soft for the U.S. And keep in mind that the central banks usually monitor employment and inflation, and recent inflation data in the U.S. Hasn't been down at that 2% target that the Fed wants it, but it's been getting closer and closer and showing signs that it might get down there, and they'd have reason to cut. And then also, obviously, the higher than expected unemployment may be conducive of a central bank loosening of monetary policy or expansionary monetary policy, where we've been contractionary for the last couple of years because inflation has been high. But anyways, seeing this also play out in a softer U.S. dollar, pound racing higher this week, a really big move from being trapped around 125, 126, 127 for a handful of weeks here to start 2024, and now getting to year-to-date highs, and also highs going back to summer of last year as pound nears 130. Euro not rallying as hard as the pound against the soft U.S. dollar, but getting close to 110, and really interesting points that these markets have not seen since really that end. Remember the end of 2023, the dollar really softened, and some of these major currencies had a nice rally against USD. Didn't get to these levels, but had a good run, and then gave back some ground to start this year. Now you're seeing that story resurge again, and we'll see where it gets to. Obviously, the weaker employment data, the higher unemployment rate from the U.S., leading to some softer U.S. dollar trends in terms of the price action here, but also leading to some stronger gold trends as if it needed it. This gold market has broken out of that $100 range. We were right there between $2,000 and $2,100 and $2,000 and $2,100 back and forth a number of times from the end of 2023 to the start here of 2024. Now we enter March, and this market has blown through that 2100 range. In intraday trade on the day of non-farm gold futures, the active month futures did hit 2200. We'll see where they close and where the market is when you're looking at it, but near or at that 2200, no matter where the market's at, a real hell of a run in this gold market, as it's become the in-demand flight to quality asset. As interest rates move lower, a lot of people looking at this gold market as a better alternative to the treasuries or other flight to quality markets that they've been buying in the last 2 years with higher interest rates. So softer U.S. data, softer U.S. dollar, potential for rate cuts, and that's been all coming together for a stronger gold market. What's next will be the inflation data, and that's that pairing their employment and inflation information going to the Fed leading up to their March meeting. They're not likely to cut or hike or do anything at the March meeting, but it'll be really interesting to see, one, what this inflation data is that comes out, the CPI inflation data. It's been, as you can see, moving lower, 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 but still sticky at that 3 to 4% range, and the Fed wants it down at 2%. So it'll be interesting to see that, but it'll also be really interesting to see what Powell has to say at the March meeting about this softer employment data. And if inflation does move lower again, does he start talking about the potential for a May cut, or does he kind of confirm the June cut, or does he say this isn't that big of a deal, and we're still looking for inflation to get to our 2% target, and maybe people start pricing out a May or June cut? A lot of different angles on this. Nothing set in stone. They haven't cut yet. U.S. dollar is definitely in a little bit of a crash mode right now, but hasn't fully collapsed. Still relatively strong for the last years of trading. But at the moment, you've got out of nowhere this higher unemployment rate, people getting out of their U.S. dollars, getting into gold. We'll see where it all goes from here. Thanks for watching.